Welcome to Women Entrepreneurs Radio. I'm your host, Deborah Bailey. And when I started this show in 2008, I was on a mission to promote women-owned businesses and help women succeed by providing resources and valuable tips from other women and men, small business owners. In each interview, my guests speak openly about their triumphs, the scary times, and tough decisions they had to make along the way. Women Entrepreneurs Radio is about showing women how to harness their natural strengths to achieve success on their own terms. Hi everyone, welcome to Women Entrepreneurs Radio, and I'm your host, Deborah Bailey. I'm really glad you could join me today. And if you're listening to the show on Podomatic, then you can also find it on iTunes. So if you have iTunes, you can do a search for Women Entrepreneurs Radio, or you can come to the blog, Women Entrepreneurs Secrets, and click on the radio tab in the menu, and it will list different platforms where the show's available. There's different places you want to listen that are more convenient, so you can check those out as well. And I hope you do. Lately I've been distributing some of the episodes on YouTube and LinkedIn. And there's also the older, what I call classic episodes are on Libsyn. So that link will be there as well. A lot of the older shows that were on Blog Talk Radio being moved over to Libsyn a little bit at a time. So if you want to listen to some other shows as well that have been on the air, so you'll have the opportunity to do that as well. So I hope you'll take advantage of it. Okay, so we're going to start the show today. Really good information. I'm sure you will get a lot out of. And my guest today is Diane Gardner, and she's an expert tax coach and is a licensed enrolled agent. Diane prepares returns and helps taxpayers nationwide maximize profits and tax savings. She's a certified Profit First professional, an accredited tax preparer, and has elite certification as a certified tax coach. Diane is a co-author of the best-selling books Stand Apart and Why Didn't My CPA Tell Me That? And she's also authored 6 other books, including her newest, Stop Overpaying Your Taxes, 11 Ways Entrepreneurs Overpay and How to Stop It Now. So welcome to the show, Diane. Glad to have you here.
Great, Deb. Thanks so much for having me on your program today.
Well, this is really a good topic for business owners, obviously, because I think in particular that a lot of times people going into business, they don't know about all these things, financials and all the related things. You know, they hear about websites and logos and all this other thing, but all of the meat and potatoes here are things that don't seem to be shared enough. So I'm really glad that you're here to, you know, really shed some light on these things that may seem mysterious to a lot of people. But, you know, just starting out, since you're obviously an expert at this, you're a tax coach. Could you go into a little bit more details to what that is and why an entrepreneur would need a tax coach?
You bet. The biggest difference between a proactive tax coach and a traditional accountant is the accountants are really awesome at recording your history. They'll help you file your payroll tax returns, your sales tax returns, your income tax returns. They tend to specialize in the compliance world, all those types of things that you really need their help in, but they're very much into recording history. Where a proactive tax coach, in addition to recording history, we want to help you write the future. So we want to help you strategize and plan so that income taxes in particular stop being one of the very biggest expenses that you have in your business. That is only done through some proactive planning. If you just continue doing nothing, then nothing changes, and each year you get hit with a big tax bill and you got all that self-employment tax to pay, and you're kind of wondering, sometimes you're stunned and wondering what just happened and why do I owe all this money? Where with some planning, we can usually make a significant change on next year's tax return for somebody.
That's a great idea, because I think a lot of times people don't do that. I'm sure that you know, because you encounter them. And a lot of people who come from the working world, if you will, who may not have even thought this way before. They may just have paid their personal taxes and not even thought about the implications of business and what that means. So I think, those are really, really important points you brought up. But, what are some of the biggest mistakes that you see entrepreneurs and small business owners make that cost them dearly in taxes?
Well, Deb, the very biggest mistake is going to tie back into what we were just talking about, a total lack of planning. And I think in life, we go through life and we know things that we know, and we know things that we don't know. But it's the things that we don't know that we don't know that can sneak up and hurt us.
Yes.
And most entrepreneurs really don't know that by doing some planning, they can change the outcome of that tax return. It might only be $5,000 or $6,000, but it could be hundreds of thousands of dollars, depending on what's going on in their business and how big their bottom line profit is. Mm-hmm. And I think that is the absolute biggest mistake, is that they're not even aware of that. They're so busy running their business, doing the marketing, selling the product or the service, taking care of the customers and the clients or the patients if they're in the medical profession. Mm-hmm. All those things are so busy doing everything, wearing all the hats they have to wear, that I think taxes, because it's kind of a scary thing, just kind of gets forgotten. Mm-hmm. And then they end up with the repercussions of that.
That's a good point. And what you were saying about people not knowing, you don't know what you don't know. And that's so true, because you probably wouldn't even think to ask these questions if you don't even know what to ask, or you don't know that they're going to be an issue for you. So I think that's a great way to put it. And hopefully people listening will identify with that, that there are probably things that they need to figure out, not so much that they would have to figure it out alone, but just to understand there's things here that need to be addressed, and they may not know how to do it, even though they're used to wearing all the hats, and you know that's true. Business owners think they can do it all, and they're running themselves ragged, and then there's things that they really should turn over to an expert. But, something else I'm sure also pertains to your expertise when it comes to the different types of business entities. And this causes a lot of confusion with a lot of new entrepreneurs. I know it did with me as well. But what are the different kinds of business entities that we could start?
Well, there's several different types of entities, and entities is one of the areas that an awful lot of businesses overpaid their taxes because they've outgrown their entity. Mm-hmm. So a lot of times when people first start out in business, they're really not sure what they're doing or really where they're going. They're just going to kind of give this a chance or a start and let's see what happens. And so because they do nothing, they start out as a sole proprietorship. A sole proprietorship reports all of its profits on a Schedule C on your personal income tax return. That net profit then rolls to the front page of your personal tax return, where it becomes subject to self-employment tax on the second page of your tax return. Self-employment tax is 15.3%. And what self-employment tax is the Social Security and Medicare that you had when you were an employee that was deducted on your W-2. You paid half and your employer paid half. So you each paid 7.65% for a total of 15.3%. Well, once you're self-employed, then you get to pay both pieces of that. Well, when we've outgrown our entity, we now have a business that's in maybe a big rapid growth phase, and you're chugging along, and those net profits are moving up the scale, and you're getting into the point where you're paying 10, 20, 30,000 in self-employment tax in addition to income tax, and it becomes very, very painful. So then we start looking at other entities. What might be a better entity for that type of business? And so if you're a solopreneur, all by yourself, you don't have any partners of any sort, depending on the state that you live in, we might look at a single member LLC. The single member LLC can give you some limited liability protection. And depending on the type of business you have, that might be a really big thing, or it might not. Once we've become a single member LLC, then we might say, okay, is there a way that might save us some money on taxes? and shelter some of that net profit from that self-employment income tax. And then we start looking at corporate structures, whether it be an S corporation or a C corporation. And I'm going to leave those. I'll come back to those in a minute. Mm-hmm. Let's say you have a partner or a spouse who is helping you with your business. So now we have two people in business. So traditionally, they might start out as a partnership instead of that sole proprietorship. And here again, 100% of the net profit of that business is subject to self-employment tax, which is another big major ouch. Plus, as a general partnership, they have no liability protection either. So they might also want to look at an LLC if they're in an LLC-friendly state and get that limited liability in place, which could help them depending again on the type of business that they have. And an LLC, a limited liability company, is a nice planning vehicle because it's a hybrid. It can act like a sole proprietorship. It can act like a partnership if we have 2 or more members. It can act like an S Corp, or it can act like a C Corp. Mm-hmm. And so it's a very flexible entity for planning. So I'll talk a little bit about corporations because now you've heard S Corp and C Corp and what's the difference. An S Corporation, the biggest difference that you guys would see on just an everyday life is that the net profit from that business flows through to the shareholders or the owners, or I'll just use the word owners, personal income tax returns, and taxes are paid at that point. But the beauty of the S Corp and under our current tax law is that the net profit is not subject to self-employment tax. A C corporation, on the other hand, pays income tax at the corporate level. So it pays its own tax on its own income tax return, and it does not flow through to the personal tax return. Now, there's a lot of other small little things that go back and forth between the two types of corporations, but we're talking mainly self-employment tax here. What are the differences? Mm-hmm. So you can become an employee of your corporation, whether it's an S Corp or a C Corp, and you have a reasonable salary, and you have withholdings and Social Security and Medicare and stuff withheld on it, just like you would if you were working for some other company. And then that remaining profit, if it's an S Corp, flows through that personal return, and it's not subject to self-employment tax. So that allows a nice planning opportunity. And sometimes we're able to save just thousands and thousands of dollars, just that one strategy alone. Mm-hmm. Other times it doesn't work as well. And so an entity or a new business may have been perfectly fine as a sole proprietor or a single member LLC when it first started out, but maybe it's 5 or 10 or 6 or 8 years down the road, and now your business is completely different than it was when you first started. So at that point in time, you may potentially have outgrown your entity type. So it's time to do some looking and some analysis to figure out what might be the best entity type for today and moving forward, so you don't have to change entity types again in a short period of time.
Mm-hmm. Wow, that's really terrific information because, of course, business owners hear about these entities all the time. And I know when I started out, I was a sole proprietor, and then I was looking at the single member LLC, and then you're like, well, should I do this? Should I do that? But the thing is, without having an expert to give you this information, you can end up making a lot of the wrong choices because you think it's this or that and you don't look at the long term. So I think it's excellent what you're saying. Also that people can end up outgrowing something, because I think sometimes we think we made this one choice and now that's it, but you don't look, again, planning, looking ahead where you're going, makes all the difference. And you're really showing that with what you're sharing here. But, speaking of that, as I just said, how can a business owner decide, what the entity type should be? Because it does get very confusing.
It does. I like to sit down with my clients and just have a conversation and find out what their plans and their goals are for the future, what their need for liability protection is, and then I will run some tax scenarios and with all that information that we gather, then we can make some suggestions. It's ultimately up to the entrepreneur to decide which direction they want to go. Mm-hmm. But we can make some suggestions as to, if you chose this entity type, here's what could happen versus this one versus this one. And keep in mind again that there are a lot of states out there that are not considered LLC friendly. And so if they're not an LLC friendly state, then we take out the LLC out of the equation. And we're looking at sole proprietorship, a general partnership, or some type of a corporate structure. Mm-hmm. So outside of having somebody coach you through this, there's a lot of articles on the internet, but I know it can be confusing if you're out there looking through all this information. Something that we do for our prospective clients or people who are interested in more information is I offer a free tax analysis where we're able to have that short conversation with them after I've had a chance to look at their tax returns and just kind of give them some general advice on where they might be going or where they might need to go to be able to start working towards putting together a plan.
Mm-hmm. Well, that's great. That's a fantastic service because it, as you're saying, there are a lot of articles and whatnot online, but of course it's overwhelming. And if you don't understand the basics about it and where you're heading, you can still end up making the wrong choices based on even what kind of information you're getting, because it's not all accurate, I'm sure.
Right.
Everything that's out there. So you're kind of taking a big chance. What's the difference between tax preparation, tax projections, tax planning? What's the difference between those terms?
And they all start with the word tax, don't they? Which makes it even more confusing. Well, I'll try to keep it as unconfusing as I potentially can here. Tax preparation, I think, is the one that most people are more comfortable with. They've heard that term the most, where you gather up all your information, you take it to your tax preparer, and they actually prepare whether it's a personal or a business return or both, and they prepare that return for you. You walk away with a copy of it, whether it's digital or paper, whatever, and then they transmit it electronically for you to the IRS and or your state. So that's one that most people are familiar with. A tax projection is a separate engagement, and that's usually done at some point during the year. I know with my clients, depending on the type of client it is, sometimes we're doing a tax projection maybe early to mid-summer, or depending on the business, more towards the fall. If they're kind of a seasonal or cyclical type business, I might wait till more that fall so we can gather what has happened in maybe the first 9 or 10 months or something of the year. And you're actually projecting out where I think they're going to land profit-wise, net profit-wise, gross sales, those types of numbers at the end of the year. And the tax projection gives us the chance to do some short-term type moves, such as usually clients are basically asking for my blessings to go shopping, and maybe it's to buy a piece of equipment, maybe it's to upgrade their computer systems, maybe, those kinds of things that they've been wanting to do, but they're kind of waiting for a time to do it when it's going to make the most sense tax-wise. And so we get a lot of those types of discussions, and they get to go home and say, honey, she just said I can go buy X, Y, Z. Sometimes that's a good thing. Sometimes it's not. And we always laugh when those phone calls come in from the spouse. But that's kind of what our tax projection does, is it allows you to kind of have more of that short-term type look. Where are we going to end up for the year? What could we do quickly before the end of the year to make a difference? Now, a tax plan or tax planning is a third type of engagement, completely separate from tax preparation, where we actually engage in the services of doing some analysis work, knowing what our clients' goals and plans are, watching for historical trends on how quickly this business is growing, watching for historical trends on some of the expenses and stuff that they're spending, getting the client's input on ways that they're spending money in their personal life, looking for things that might be deductible if they were just moved over to be paid out of the business, and coming up with a plan that will actually work for the next 3 to 5 years that is guaranteed to save them tax money year after year after year as long as they follow the plan.
Mm-hmm.
And so those are really fun to put together because I get some input from the client, and then I get to be a little bit creative and come up with different scenarios. If you did X, this would be the outcome. If you did Y, this could be the outcome. And then we meet a second time and we talk about these different scenarios based on information they've given me. Mm-hmm. And then from there, then they can make the informed decisions that they need to make. And they're not just making an emotional decision, but they're making a rational, well thought out decision because they've seen how the numbers play out. Mm. And how some little moving piece in their business, by changing that, what a difference it can make in the tax outcome for them.
That's really good that you are, going through the numbers and showing them different scenarios, because then people can see where they're heading and what choices to make. And it helps, as you said, it helps them to be a part of it. They're participating. It's not just someone telling them to do this and do that, and they still may not really understand or feel comfortable. So I think that sounds like a really wonderful approach, especially for those people who may be kind of afraid of these numbers anyway.
Right. And a lot of times people have the maybe the illusion that the person who did their tax return is doing tax planning with them. Because during the tax appointment, maybe they gave them a couple suggestions on things they could or should be doing. But tax planning is so much more than that. Mm-hmm. It really needs to be a well thought out plan, something that you can follow for the next several years.
I'm glad you made that point, because I think anyone who's had their taxes done or anything probably has had that kind of scenario where someone is saying, well, this could happen or that could happen. And as you said, there's a lot more to it than that. So I'm glad that you made that point, so the listeners can know that they can look for something a little bit more extensive in their taxes. So what we're going to do right now is just take a very short break, everyone, and we are going to be right back.
Hi, this is Deborah. Not only am I host of Women Entrepreneurs Radio, but I'm also a writer and coach. I've learned that making professional changes calls for a change in mindset, and that's not always easy to do. In my book, Think Like an Entrepreneur, Transforming Your Career and Taking Charge of Your Life, you'll learn the 5 steps to thinking like an entrepreneur so that you can move from idea to action. You'll also get information on how to manage fear of failure and how to banish self-doubt. And you'll receive lots of motivation to pick you up and point you in the right direction when you're facing the emotional and mental challenges that come with making life changes. In fact, one reviewer said, the book gave me ideas to match with my own feelings. This book is clear, straightforward. All tips are really good and easy to apply. I couldn't agree more. So get your copy today of Think Like an Entrepreneur, Transforming Your Career and Taking Charge of Your Life. It's available in print, ebook, and audiobook on Amazon.com.
And we're back with Diane Gardner. She's a certified Profit First professional, an accredited tax preparer, and has a lead certification as a certified tax coach. So Diane, could you please share with everyone where they can find out more about you and where they can find your books?
You bet. My website is www.taxcoachforyou.com, and we use the number 4 in that address. So taxcoach, the number 4, you.com. Out there, we love to give away copies of my books. And all they have to do is go onto the site, click on the books tab, and they'll see quite a few of the books. Most of them we give away for free. We do sell a couple of them. We just ask that they pay shipping and handling. And that allows us to give away more books because we're not spending quite so much on the postage yet. There's also a lot of other free resources that they're welcome to download. If they'd like to talk to me or reach out to me for a free tax analysis, we're happy to do that. We want to get the word out there to people just to let them know that they can make a difference on their tax return. They don't have to accept status quo.
Very good. And, it helps people to realize that they do have some control over what they're doing, and they can make choices, and you can make informed decisions as well, which is really probably the most important thing. You know, when you're a business owner, you're just starting out. It may seem like, wow, there's all these decisions to be made, all these things that now you to think about. So if you can rely on experts to help you and to show you the things that you need to know about, then that's an advantage that you'll have, and one less thing that you think you're trying to be an expert about. So everyone listening, please make sure you're taking this in. You know, it's good information you really need to take advantage of. So how can entrepreneurs write off medical expenses through their business?
Oh, I'm so glad you asked that one, Deb. That medical expenses, healthcare, especially in recent years, have become huge expenses for an average family. Mm-hmm. So if you have a business, there are ways that you could potentially write off up to 100% of your out-of-pocket medical costs. And when I say that, people go, what?
I know.
How do you do that?
Yes.
So, the absolute easiest way to do that is to actually be a sole proprietor. And it's one instance where being a sole proprietor is a big plus, mm-hmm. but you do need a spouse. So if you are married, and if you can come up with a way for your spouse to actually work in your business and legitimately help you in your business, then we could potentially pay that spouse in medical expenses. Mm-hmm. So they don't get a paycheck, but they get the health care or your out-of-pocket medical expenses paid through your business as their payment for what they're doing. And so to do that, we always say you do need to have a job description and keep a timesheet, things like that, so that you have proof that the person really was working in the business, mm-hmm. and that the quote pay, which is reimbursement of medical expenses, is kind of, it's in conjunction with what they're doing in your business. Mm-hmm. You know, they're not working 1 hour a year and they're, writing off thousands and thousands of dollars of out-of-pocket medical costs.
Right.
So you got to be really careful about things like that. But it's a great way to write off your health insurance premiums and all other out-of-pocket medical costs. There's a little bit of paperwork you got to do, like anything else to mm-hmm. make it legitimate, but it's a great way to write that off. Now, if you don't have a spouse or you're not a sole proprietor, it does not work well in an S Corp, and it does not work well in a partnership. Well, it can in a partnership, not as easily as a sole proprietor. But then the next entity that it works really well with is a C corporation. And in a C corporation, you don't even need a spouse, because you can be the employee in your business and you can take advantage of it. Now, if you've got several employees working for you, it may not be a great strategy, because what you do for yourself, you have to do for the rest of your team. So you got to be careful there that if you, say you're going to reimburse up to 100%, you're going to have to reimburse up to 100% of theirs as well. Mm-hmm. So we got to be careful, but it's a strategy that in the right instance, it works very, very well.
Mm-hmm. Wow, that's really great information. And since I'm sure there's a lot of entrepreneurs who have the spouse working with them in some way, that's really interesting. It's something I really had never heard about. Fortunately, I don't have a spouse, but maybe you can go find one.
Yeah, rent a spouse. Rentospouse.com, right?
If someone starts that business, then you'll know how that happens.
They heard it here first, folks.
Right. It wouldn't surprise me. We find that after this is out there. But, and also as far as family working, how could someone hire their kids to work in their business?
Hiring their kids and or their parents, because sometimes some of us are supporting older parents, mm-hmm. is another wonderful strategy. Hiring the kids is a great way to write off things like specialty camps that they love to go to. As we're recording this at summertime, mm-hmm. so you see a lot of various fun type camps, especially when you got working parents. You got to have some place for those kids to go. So if you can come up with a way for that child to legitimately work in your business, IRS says they need to be at least 7 years old. So you need to come up with some duties and stuff that they can do within your business. We also want to have a timesheet and a job description. You're going to want to pay them something that makes sense for their skill level and their age. So, it's going to be pretty hard set if you're going to pay them, a couple $100 an hour to stuff your newsletter for you or something like that. Because it's got to be what you would pay somebody else and then back off a little bit for their age and their skill level. But it's a great way to pay for those types of things, or to potentially pay for private school or some things like that through just paying them out of your business. Moving it from an after-tax deduction to a pre-tax deduction. It works great, I said, for older parents. I have used this strategy for years with my own mother, who has been, she retired years ago, but she has worked in my office ever since, and she stuffs our newsletter, she takes out the trash, she does the shredding, just those things that allow her to come in maybe 2 half days a week. That's all. She doesn't really want to work, but she needs a little extra spending money. So we would be helping her anyhow. So we're helping her in a pre-tax way instead of in an after-tax way. So it's a great strategy when it works and in the right circumstances.
That's great to hear, because I know a lot of people do have their family members or want to, and now it's a good way to find out that there is advantages to that. Besides having them work with you, for you, there's also some other tax advantages that you could take for that.
That's a great strategy for the college kids who are home for the summer.
That's true.
Put them to work in your business. Let them earn a little bit and help with those costs when they go back to school. They've been able to save up some money. Now we do have to actually issue them a real paycheck. It has to be written out to them, not to yourself or to anybody else. So, we've got a few dotting of the I's and crossing of the T's that has to happen. But once you do those things, it's a great way to help pay for maybe some of the costs of them going to college, or, like I said, any of those types of things that we're always spending money on for our kids.
Exactly. So I think those are great ideas. And also, since we're talking about family and medical expenses and all these different things, how do pensions and retirement plans affect small businesses?
That's another really good area that so many entrepreneurs kind of almost forget about. They're so busy running that business, and then they got to do the marketing of the business, and then they got to try to somehow corral all their expenses and things like that. And the retirement side sometimes just completely gets forgotten. And so we like to do that analysis we were talking about earlier and come up with some ways that when they hit retirement era, they've at least been able to put some money away. And it might be something like a simple IRA plan, or maybe a SEP IRA, or moving on up the ladder, it could be a 401k. So there's a lot of different choices of things they can do. Some of the plans basically have no cost to them. Others are more of a true qualified plan, and so there's costs associated with doing them. So that's why the analysis comes into it, where should this particular business be? And just because you have maybe a simple today or a SEP today doesn't mean that maybe down the road it's time to step up into more of a real qualified plan and be able to contribute a little more money. So it just depends on what the goals and the plans are of the current business, where they're going today and then tomorrow, and then be able to make some suggestions along those lines. Let them make some pre-tax contributions and take the deduction for it today, with the idea that at retirement time, potentially their tax rate would be lower because then they don't have all the business income. They just have the retirement income and hopefully some Social Security sitting out there at retirement time.
That's good advice. Definitely, because you're right. I think people don't think about these things, too busy working the business, and you're like, oh, I'll get to that. And, not really a good plan to keep putting that off.
Right.
Speaking of that, what are some of the often missed tax deductions for entrepreneurs?
Well, I see entrepreneurs missing their mileage as a deduction, or you have two choices. You can take what's called standard mileage, where you keep track of your miles and then you can use that as an expense in your business. Or then there's the actual out-of-pocket cost method, where you look at your vehicle and you can depreciate it and then pick up all the associated costs, like your fuel and your oil and your repairs and tires and insurance and that type of thing. But I see a lot of people not realizing that they need to keep a mileage log. Mm-hmm. And they kind of, especially new clients, they look at me and they go, what? Why do I need to do that? And without the mileage log, we can potentially lose what could be a very large deduction, depending on the nature of your business. Mm-hmm. So if you're in a business that you're on the road quite a bit, I'm thinking, real estate agents are constantly on the road. A lot of service professionals, because they're taking appointments all over the place. Some of those types of businesses, you might be missing anywhere from maybe a $5,000 to a $20,000 deduction, mm-hmm. just because you didn't realize that you needed to be recording all these your miles and that type of thing. I also see people missing out on the meals and entertainment deduction. Mm-hmm. Here again, they don't know that they don't know, and they don't realize that anytime you are meeting with somebody for the purpose of furthering your business, getting a new customer, client, patient, whether you're trying to strengthen your current relationship with them, getting a referral, all those types of things have deductibleness with them. Mm-hmm. But the IRS does require 5 pieces of information. They want the date, they want the name of the place that you went, the dollar amount you spent, who you were with, and what your topic of conversation was. So if you record those 5 pieces of information, then you have the ability to potentially go ahead and write that off. Sometimes people don't realize that you don't have to go out to a restaurant or a coffee shop, that you can have people over to your home and still be able to write it off. Whether you're having some clients over for dinner, mm-hmm. or you're having them over for, maybe some barbecue, a backyard barbecue with your customers or something along those lines. That is still can be a deduction. It does not have to be at a restaurant or someplace like that.
That's interesting, because I really hadn't thought of that. I was always thinking about you're going out or you're out, as opposed to, you could be entertaining at home, or depending on what kind of business, particularly, showing something or having some kind of a show or whatever you're doing. So that makes perfect sense. Wow. That's a lot to think about here. So, you shared so much good information, Diane, and I just want to ask you, how do you find the right professional to work with? How do we do that?
Well, first of all, you want to find an accountant who is proactive, somebody who is not content to just record your history. And we always say looking for people with the letter CTC behind their name, which means a certified tax coach, is a pretty good indication that they are proactive. Otherwise, I'm always happy to talk with people. I do work nationwide. And if I don't have the answers, I have a large network of other proactive tax planning clients that I can hook up with and make the referral off to somebody in their own home state. So that is one way to find it. But basically, making sure that accountant understands your business, understands your plans and goals, that they're listening to you, that you're having a good conversation, and they're not just being kind of unresponsive, because sometimes accountants are known for that. And so making sure that you're tracking together and that you're planning things out together, and that they're knowledgeable in the world of tax planning and what the various strategies and deductions and things are. Mm-hmm.
Wow, that's great. That's good to hear, because then it means that you can really connect with the right person. And also, since you are also someone who can work with people across the country, that's excellent news. For those people, I'm sure, who are listening and really excited about what they've heard you say today, that they know that they can also follow up with you as well, Diane. So I think that, we're at the end of the program. This has been terrific. Did you have any final thoughts to summarize, or have we covered everything?
We've probably covered enough to make their head spin a little bit.
Yes. That's true. I understand that, but I think the way you explained it was just so nice and clear that, people could really get it and understand it, even if they feel that numbers aren't their thing when it comes to this kind of discussion. I think that they'll be a lot less overwhelmed and intimidated after hearing how you broke it down for everyone. So I just want to thank you so much, Diane, for being on the program and sharing your expertise. It's really been a really good discussion.
Well, thank you. And I love doing these types of interviews, so I really appreciate you having me on your program today.
Wonderful. And everyone, I know you enjoyed it, so please make sure you stop by Diane's website, check out her books, and really learn more for yourself and for your business. I know that you're going to do that because it's going to help you. So make sure you do that, okay? So this is the end of the program. It's been Women Entrepreneurs Radio with your host, Deborah Bailey. I'm glad you could join me today, and we'll see you again next time. Bye. Thanks for joining us. You can also join in the conversation on Facebook.com/Women Entrepreneurs and on the website, WomenEntrepreneursSecrets.com. And don't forget to listen in on dvcoach.podomatic.com and on iTunes.